Welcome to the ISO Show, dispelling myths and sharing tips for success to improve your business with ISO standards, with your host, Mel Blackmore.
Hi and welcome to the ISO Show. Today's guest is Tiffany Cheung, the Corporate Engagement Lead from AlliedOffsets. Hi Tiffany, great to see you today.
Hi Mel, great to see you too. Thanks very much for having me on again.
Yeah, well, last time you provided some great insights into carbon markets. So yeah, really grateful for that. And you provided a fantastic introduction to carbon markets. So for our ISO Show listeners that didn't catch that episode, I'd definitely recommend going back and listening to that. Also, whilst you're there, don't forget to hit subscribe because that means that we can bring this podcast to a much wider audience. It really does make all the difference in terms of raising standards in relation to not just ISO standards, but in terms of the sustainability standards in particular that we're covering this year. So today, Tiffany, I'm really excited to hear about the latest trends in carbon markets, which I know you're at the forefront of. So I know that obviously this is a rapidly changing landscape at the moment. And there's been a lot of discussion around corporate sustainability disclosures just recently. What do you think the potential impact of corporate disclosures are on the carbon markets?
So I would say there's two overall points here. One is the possibility that increased corporate disclosure is part of a parcel of changes that's taking place within the thinking of the company that altogether is likely to drive increased engagement with the voluntary carbon markets, both through offsetting and investing. The fact that a company is choosing to spend more time on creating and publishing and potentially promoting the details related to their corporate disclosures is a sign that they're more likely to be thinking about what kind of action they can be taking more broadly. And it's a possibility that using the voluntary carbon markets will be part of that. The second impact that I anticipate would be that project developers will likely benefit from increased insight to the kinds of offsetting projects that buyers are interested in and are likely to enter the space for. So related to that is potentially more focused development of projects with the knowledge of the kinds of projects that the private sector is willing to offset or invest in.
Yeah, we're certainly seeing a greater focus on transparency of information and data to be able to enable better decision making processes across organisations. So, and based off what you've seen from the corporate sustainability reports, how are the rates of decarbonisation looking across different sectors? Because I know that you work across a wide range of sectors in carbon markets.
Yep, that's right. When we were looking at corporate emissions reporting last year for our major annual report, which is something that we're going to refresh again this summer, we covered about 20 different sectors and we found some quite varied changes in decarbonisation. So overall, to give a macro view, the biggest total polluters remain the same as what any member of the public would expect, and that would be energy, ground and maritime transportation, materials and mining. So for the biggest polluter by far, which is the energy sector, the plus side is that on average it has decreased its emissions in both scopes 1 and 2 since 2019, which was quite gratifying to see, although there's still a very, very long way to go. But I would be cautious about optimism on that front because we know that some major emitters in that sector have rolled back their climate commitments in the last year or so. And these are kind of areas that are particularly susceptible to change in terms of political environment, particularly in the United States. So we should be very careful before celebrating this as a set linear change. The other thing that I would say is interesting in terms of decarbonisation in a specific sector is scope 1 for aviation. It has actually been going up since 2020, although it's yet to recover to pre-pandemic 2019 levels. This is an area of particular interest for us because this sector is going to have to grapple with its emissions whilst also looking at predictive growth in consumer and business travel over the next decade, combined with the fact that many companies are both Science-Based Targets Initiative committed and they come under CORSIA, which is the Carbon Offsetting and Reduction Scheme for International Aviation. And those are two kind of regulatory schemes in the space of both sustainability more widely as well as specifically for carbon emissions, which are going to apply pressure for them to decarbonize. So that will be a particular area of technical interest. We'll see whether or not human innovation is able to drive change at a pace that's going to meet demand that will increase emissions in that space. I want to just end, though, on a positive note, though, because across the different areas that we were looking about 18 sectors had decreasing average emissions in scope 2 over the last couple of years. And that was very heavily because of increased energy efficiency and renewable energy sourcing, which is something that's really great to see so many different companies across different industries engaging with.
Absolutely, yeah. Those figures on the scope too. It's a really positive trend that you've seen, which is fantastic. And I think a lot more organisations are much clearer on reporting on scope 1 and 2 emissions, and with having that data, they can then make decisions, can't they, in terms of where they move forward. So you mentioned about regulations in aviation. Do you see that really helping to improve that shift in terms of trends on the carbon markets?
Most definitely. I would say that for CORSIA specifically, that is one of the main motivators for engaging with emissions. And the reason for that is something that we're going to come on to later in this episode of the podcast in terms of actually putting a price on carbon. But what CORSIA does is it makes sure that aviation and other kind of airline bodies and those operating within the space can't forget that there is actually a price associated with their emissions, and if that remains unmitigated, it could be something that has a significant material financial impact on their operations. So CORSIA is definitely a major driver in both decarbonisation as well as engagement within the voluntary carbon markets.
Okay, great. Thanks for sharing those insights, across the different sectors. That's absolutely fascinating. And on the subject of trends then, are there any particular interesting bio trends that you're starting to see emerging in the voluntary carbon markets in recent months?
Yes, definitely. Thanks for giving me the opportunity to answer this question, because it's honestly one of my favorite parts of this job, and kind of getting to see all of the different market entrants that are coming through, as well as what specific retirement notes people are leaving. Part of the reason why I'm able to notice these trends is because of the level of detail that buyers are leaving in the retirement notes, which is kind of, they can say all manner of things. Some people choose to leave it blank, but others will actually give justification and attribution for the credits that they're retiring. So, for example, Chinese and German manufacturers, including those that are operating at relatively low levels in the market, have become a steady presence in the market with really detailed approaches to the quantification of their emissions. You'll quite often see them actually labeling not just the factory, but the specific product that they're offsetting for, which is an incredible amount of disclosure, and it shows really high levels of engagement with their environmental impact. The difficulty is that sometimes speaking directly to those companies to hear what their specific motivations behind this activity are isn't always easy. I mean, we're a UK-based company, so there are certain limitations there, but certainly this is an area that AlliedOffsets is really keen to engage much more on to understand buyer motivations in the space. I think the second most interesting kind of trend in the market recently has been from the Australian market. So in particular, I'm seeing lots and lots of activity that's directly being driven by Climate Active, which is one of the major labels coming out of that region. And that's driving quite a lot of retirement, particularly across like real estate and pension funds. And that's brilliant as well, because you can then directly see what sorts of schemes are effective in what different contexts and how that could potentially be replicated across different markets as well.
That's really interesting. Earlier on, you mentioned about carbon prices. Many companies are now starting to set their own internal carbon prices. Could you just explain about how companies do this?
Yeah, of course. So for context, what an internal carbon price is basically it's unique to each company, but it can be based off of the same principles. And the function of it is to associate a specific price within each company for the carbon or other greenhouse gas emissions that are associated with their business activities. So this is normally based off of things like the World Bank calculations on the cost of climate change to society, or it could be based on the price of carbon set by an emissions trading scheme that is local to that business. So for example, Tesco uses one that's like broadly based off of the UK compliance scheme.
Right, okay. And how does Allied Offsets see these companies using a carbon price to ensure that their sustainability goals are actually financially viable?
I would reframe this question a little bit as pointing out that it's also a case of making sure that their business operations are financially sustainable themselves.
Good point. Yeah,
Take
yeah.
a good example of this. So EasyJet has an internal carbon price that's based off of the UK emissions trading scheme. They use that internal carbon price to input into the company's master financial models, and that drives their 5 and I believe 10-year long financial plans, modeling and budgeting, that kind of thing. So that really helps to drive their possibilities for profitability, and it also drives things like the geographical routes that EasyJet operates, as well as the frequency of service. So you can see there that by using an internal carbon price, it really has a very tangible and material role in the wider business decisions that they're making. And that is specifically true because as an airline operator, EasyJet is known as being a big emitter that comes under different kinds of carbon pricing schemes. So for them to not have an internal carbon price would be something that would actually be negative for their whole business sustainability. For companies that aren't even as big as EasyJet, having an internal carbon price is still a really useful way to budget certain activities and see where emissions might be centralized in a particular company or department. So, for example, it might be a case that you know that you have an internal carbon price of, say, £50 per tonne, and you are then using an emissions calculator or going to an advisor that's saying, well, if you were to set a budget based off your activities, the budget for the sales department, because of their international travel conferences, is somehow 10 times higher than the IT department. So that might be an area that you need to decarbonize on in particular and look at different routes of business travel. And in the same way, it can also be used to create an internal fund for decarbonizing. So instead of looking at it as just a stick, you can also say, well, because we know that we spend this much in terms of carbon, we should also spend that much equivalent in terms of decarbonizing itself.
Interesting. Yeah, yeah. So how does an organization, if an organization would like to get some assistance with the carbon pricing, is that something that you do at Allied Offsets?
It isn't something that we do at Allied Offsets, but we have plenty of data that gives context on what other companies are doing and what the range of prices are. So there are specific schemes that we list as a tag associated with specific buyers in the market, which will tell you what program they're using to set their internal carbon price, what that specific price is, and what the source of that information is as well. Sometimes you'll see specific companies within the market that haven't chosen to go through a particular standard but have set an internal carbon price based just off of their unique activities. And that will also be something that we have data on, as long as it's something that they disclose, of course.
Yes, yeah. And I guess obviously that's going to vary from time to time. So it's important that any organisations that are using a carbon price internally, that they can check all the data and the facts just to make sure that they're not kind of over or under pricing on that.
Yeah, and on that note, I mean, internal carbon pricing is something that needs to be reviewed on a regular basis. The costs associated with emitting in particular kind of business locations is not going to remain the same. And it's something that we need to take into consideration as market participants more widely as well, because it's something that can also be affected by national legislation, for example, which will increase the risk of emitting. And so lots of the times you'll see that it varies for each company, but most companies that have some kind of internal carbon price will also have a ramping up system where over time they'll say, we plan on increasing it by this much percentage or this many dollars over the next couple of decades. Or B, they'll have a review plan in place to say, we'll need to meet up with, our consultants and the kind of board of directors and see how we should change this next year and every year.
Mm-hmm. Okay, great. That's really interesting. So I guess, if organisations would like to get access to that information, then they can get in contact with you at Allied Offsets then, and you can advise them on the data sets and potentially the frequency, because I guess that would be one question that an organisation might ask is, how frequently should we be reviewing this? I mean, would you say quarterly, annually? How frequently should organisations be looking at this?
I would say at least annually would be wise. And one thing that we're kind of seeing within the environmental space more broadly is this move towards seeing sustainability related impacts within a company being sequestered into wider financial operations as well, because the risks associated with climate change are going to become more material to businesses over the coming years. And so as a result of that, perhaps internal carbon price should be something that companies look at as part of their annual financial reviews, for example. That would be
I was just thinking that, and then tie that into any internal financial reviews, whether that's on a quarterly basis or more frequent.
I also want to say that we're very interested in hearing from companies that are considering internal carbon prices, but might decide against it, or they haven't totally decided yet. And the reason for that is because of the fact that it isn't necessarily going to be the only tool that companies want to use. And so learning about the logic behind that is always going to be useful for us.
Okay, great. No, thanks very much for that advice. That's really helpful. So for businesses that are looking to engage in the voluntary carbon market, what would you say are the critical steps that they should take to mitigate price volatility and ensure that they're investing in high quality and impactful projects, according to the predictions your data is pointing to?
Sure. So I would start with a pretty commonsensical point within the market, which is you must focus on decarbonising your business operations first and engaging with your suppliers on scope 3 as well. Lots of companies choose to only use the voluntary carbon market for offsetting, and that would be something that covers their residual emissions. So obviously the smaller that your residual emissions are, the less that you're going to have to buy offsets to cover them as well. The second point would probably be to decide what kind of projects you want to actually spend money on, whether it's offsetting or investing. So, for example, you might be wanting to prioritize biodiversity or water scarcity or gender benefits within specific types of employment in your area. So knowing what is valuable to you and your company will help you to select projects that are true to that, and will also help to actually narrow down the kind of choices that you can make, because there are so many offsetting options and different kinds of very valuable projects within the voluntary carbon market. And you might also take the kind of most financially efficient model, which is to just buy the cheapest credits that are still of good integrity and decide that you're going to have the most impact per dollar that you're able to spend. Probably the next thing I would say is that once you've decided the kinds of projects and regions that you want to be buying carbon credits from, try to build strong relationships with developers directly where possible. Obviously, that'll be another way of mitigating price volatility by actually taking out a broker or another intermediary who's going to take, skim a little bit off the top and look at offtake agreements, because the other benefit that doing something like that will have is it will ensure that you have the supply of carbon credits into the future that you require, and you won't need to worry about how the market might change or become more volatile over the next couple of years. And the last point is that if you're operating at quite a significant scale, you know that it's within your company's ethos to be engaged with the voluntary carbon markets for an extended period of time. At that point, it would really be wise to work with some kind of consultant or business that's focused on the voluntary carbon market to look at what they see for the future of the carbon markets for example, for forecasting, for the specific kinds of projects that you want to buy from, whether or not there might be certain climatic changes that will make the regions that you want to invest in more vulnerable to certain kinds of natural hazards, so on and so forth, because this will actually help the business to get a really good understanding of what the future of the market looks like, not just in general, but specifically in terms of their carbon credit procurement strategy.
Mm-hmm. Great. Oh, that's fantastic advice. Yeah, brilliant answer for that question. So I know it was a fully loaded question. So yeah, you answered that beautifully. So thank you very much, Tiffany. And yeah, it's been an absolute pleasure having you on the podcast again. Thank you very much for, for all of your insights. Is there anything else, in terms of advice that you'd like to leave our listeners with before you go?
Oh, okay. Well, I would say advice for listeners. I would say that the voluntary carbon market has been through a turbulent period of time. And if you feel like this is a space that has too much instability and negativity associated with it, we have a great deal of sympathy for that view. But the market has been and is evolving away from that. And the kind of concerns and anxiety that people might have had about the reputational risk associated with offsetting maybe 5 years ago has reduced greatly since that point, especially as we're looking towards the voluntary and compliance markets merging together. That does mean that the quality of these projects is also going up all the time. So there isn't that same need to be so worried about it. But if you decide that offsetting is not right for your business, there are still other tools that you can learn from the voluntary carbon markets, like internal carbon pricing, that can still be really useful for driving decarbonisation.
All right, thank you. And I think that just wraps it up quite nicely, I think, because obviously the ethos of the ISO show is all about raising standards. And yeah, that's something that we're definitely seeing right across carbon compliance, carbon markets, carbon verification, and just improving the quality of the data and obviously driving key decisions and sustainability initiatives to actually make a difference and take action rather than just make pledges and commitments. We're definitely seeing that right across the board as far as carbon compliance is concerned. So it's great that the quality is rising further as well in carbon markets. So yeah, thanks once again, Tiffany. It's been a pleasure having you on the ISO show.
Thank you so much for this opportunity, Mel. I hope that it's been informative for your listeners.
Absolutely. Yes. Thanks very much.
Looking to achieve certification to an ISO standard or just need a helping hand with ISO compliance? Contact us at blackmoresuk.com.